This is Robert Harper with Farm Bureau's Grain Division, bringing you the Merchandiser Minute today, Friday, April the 5th, 2019. At the end of a week where we've just been watching and waiting for any type of influence and any type of news that could positively move the futures markets. We did close up on corn, wheat, and beans all across the board this week. That's positive. The trade worked hard all week to work out the details of that March 29th, last Friday's acre and stocks report. And we know that that acre number is going to change plenty between now and then, but we know that those huge stocks that they found aren't going to change, and that's definitely price negative. We came into the week with the speculator being record short in Chicago. They're telling us clearly their opinion that they think price is going lower before it goes higher. Keep your eye out for that about 4 o'clock this afternoon when this week's report comes out. And we did see the highest trade volume in history last Friday after the report for the nearby and new crop corn futures contracts. It just shows how much money is waiting on the sidelines. Farmers selling has been at a standstill as these futures prices have been range bound. That's not only here in Virginia but across the country. But remember, there are a lot of bushels for sale above the market. When we get a rally back to a 50 or 100-day moving average, that's definitely going to limit upward price direction. We saw several threats this week from President Trump coming around the terms of closing the Mexican border if they didn't get immigration issues worked out and drug issues. And we also saw some talk about tariffs being placed on automobiles coming out of Mexico. That got the market nervous. We had round 9 of the tariff talks. China was in Washington this week, and we didn't get any quantifiable details out of those talks. We just heard from the president that within 4 weeks, quote, we're going to see a monumental deal. We did see another case of African swine fever documented in China. Remember, we think most analysts think about 30% of demand, soybean meal demand, protein demand has been lost there due to ASF. If you take a look at the outside markets, they can help your price right now from a crude oil perspective. We went past $60 a barrel this week. We're currently trading around 63. And on the reverse side of that, we're seeing the dollar index strengthen again, back up to a 30-day high at 97, and that's going to hurt our price direction going forward. Equities were up this week. We had a rally in China with their purchasers manager index went higher than it had in months. That got their equities up, and that sent ours up. That was price positive. Export sales came in great for wheat and for beans. We're thinking maybe Russia's done with old crop wheat sales. China bought another 30 million bushels of beans, and that's definitely positive. Next week, we've got the crop report at noon on Tuesday. We're going to be getting ending stock numbers for the U.S. and the world updated, as well as South American production. Keep your eye on North American and South American weather. We'll be looking for flood information, more coming out in the Missouri River Basin, and see how those producers are affected. Remember, stick with your marketing plan as you go to the field. We wish you the best getting some corn planted next week. Call us if we can help you with new crop or old crop marketing. This is Robert at Farm Bureau's Grain Division.